Hi, everyone. I hope that everyone can hear me. I am going to do a test on my end to ensure that everyone can hear me. And in the meantime, we're going to wait for everyone to get settled in and join the webinar. So I think we are good to go. I am going to go ahead and get started. Welcome to Vision Future Reality Rebuilding Your Credit. My name is Emmett Sparks, and I'm a financial strategist who has a passion for communicating financial literacy and educating people about financial literacy because I believe it is something that we all need of all ages to make healthier decisions about money. So we are going to go ahead and get started. That's just a little background about me so that you know that I am qualified to do what I am doing tonight. Basically, I graduated from The Ohio State University with a degree in accounting, and I realized that everyone around me was asking me all these money questions. And so, 2015, I decided to pursue this dream and educate students and adults about financial literacy. Over that time, I authored an ebook called Vision Future Reality: How to Budget Like a Boss. It's a quick read, and it takes you through like step by step of how to determine and develop and prepare a budget for yourself. So I've been in financial services for 11 years in kind of all spectrums of financial services. So insurance to banking to internal audit. So my company that I started, I named it after myself. It's a financial education consulting company. And there I design financial plans for women, men, millennials, as well as business owners. And I help them with, some of the misconceptions that they have about money, credit, savings, debt, budget, everything. And right now I am in the Dayton, Middletown, Cincinnati areas. So, like I said, again, thank you for taking your night and your time to spend it with me to learn some new or maybe some old tips that you did not know about to rebuild your credit so that we have that stellar credit score of 700s, 800s, and not 500s and 600s, so that we're not being charged high interest rates, so that we're not being denied for things that we really want. So, if you don't mind, we're going to go ahead and get started. So, first, I'm going to walk you through the basis of a credit score, what that is, you know, how do you read it? Where do you stand on the scale of bad or good? So your credit score is like your adult report card. So people think that school ends, they think that they stop being graded in, pre through 12, pre-K to 12, to college. No, the society, the government is going to assess you a number of bad to excellent on this scale. The lowest credit score that you can have is a 300, and the highest that you can have is an 850. So, where do you fall on this scale? Excuse me. So, the components that make up every credit score, regardless of the person, regardless of the race, regardless of the occupation, you are determined, you are kind of based on these five things. So, payment history, credit utilization, type of credit used, new credit, length of credit history. So I'm going to go through each of these in detail so that you know exactly what they are and exactly the percentage that make up your credit score. So this is the quick breakdown. So as you can see, payment history is 35% of your score. Credit utilization is 30. Credit history is 15. Credit used is 10. And new credit is 10. So payment history. Payment history is simply, do you make your payments on time? Simple. Again, that's 35% of your credit score. Credit utilization, all that means is how much credit you're using at one time. So here is a nice little kind of formula or equation for you. So it's the amount owed over the total amount of credit allotted, and that equals your credit utilization. So, say for instance, for math purposes, I have $5,000 in the amount owed. That's the amount of credit that I'm using at this time. But the total credit across all my credit accounts is $15,000. So I'm currently using a third, or 33% of my credit utilization. This number needs to be kept under 10%. So if you are currently using more than 10% of the credit that you have, that is negatively affecting your credit score. Anything under 10 is great. Usually people will say be under 30 to have a great credit score in this area. However, you really want to be under 10 to give yourself enough cushion for some of the other areas or other components that make up your credit score. The types of credit used. So I get this all the time. I get people asking me, should I open up a lot of store credit cards? Should I get a credit card through my bank? It all depends. So there's two types of credit. So revolving credit is a predetermined credit limit that you can borrow up to. So examples of revolving credit are like store credit cards, so like a Macy's card or an Express card. A bank issued card, so your Fifth Third, your PNC, your Huntington, your Chase, any line of credit. People usually sometimes take out a line of equity on their house to do home improvements. Anything like that. Those are all revolving credits, meaning you can borrow up to a certain credit limit. So $500. Say I had a Macy's card and it was a limit of 2,500. That is revolving. An installment is a fixed number of payments that must be paid. So that's like an auto loan or a mortgage loan. So people have 30-year mortgage loans, they have 5-year car loans. You make the same exact payment until that's paid off for the next 5 years. That's an example of installment credit. So, like I said here, those accounts usually, the type of credit that you're using makes up 10% of your credit score. So you don't want all revolving credit, and you definitely don't want all installment credit. You want a mixture of the both. New credit. So new credit is simply applying for new credit. So if you go apply for a new car loan and you go to 5 different places, that is considered as new credit. You applying for a home loan, you applying for a credit card, that's all new credit. However, new credit is the only component that double negatively affects your credit score. So I say that because one, it changes the average age of your credit history, and we'll learn about credit history in a moment. So it will take your longest credit item and your shortest credit item and give you an average of years. And also, it affects your credit report because it is a hard inquiry. So, a hard inquiry and a soft inquiry are things that hit your credit report when you are requesting new credit. So hard inquiries stay, both soft and hard inquiries stay on your credit report for 2 years. Hard inquiries are negatively affecting your credit report or credit score for 1 year. So you always want to be cautious and be purposeful when you are seeking out new credit. And to just give you more background on the inquiries, so hard inquiry is reported when you are applying for credit. It's usually an auto or mortgage. As you can see, if you say you go to like 5 different car dealerships in a 14-day period, it's counted as one inquiry. Anything recent is more impactful to your score. So it impacts your score less than 5%. So, it's about 10, that's about 10 or 15 points. On the soft inquiry side, while it does not affect your credit score, it will show up on your credit report. So those are things like promotional items. So when you go to like a Credit Karma or anything like that, where you own a request of your current lenders, your collection agencies, anything like that, in the insurance companies when you are seeking employers and things of that nature, those are things that are soft inquiries on your credit report. So here's where I was talking about the length of credit history. So as you can see, it takes the age of your oldest account and it takes the age of your newest account and gives you an average. So however long those specific accounts have been used. So you could have a credit card on your credit report and have never used it, but if it has positive credit history or negative credit history, it will still affect your credit score. So a lot of people, what they will do is they have a credit card that has maybe had some negative credit history on there. They will, kind of say, oh, I'm going to pay this off and close it. That is the worst thing that you can do. Because say that was kind of like your oldest account, you don't want that closed because now you are either you're more than likely decreasing the length of credit history. So you want at least 10 years of credit history to apply for something, because when I first started out applying for credit, that was one of the things. You don't have credit history. Your length of credit history is not long enough. I'm like, well, duh, that is why I am applying for this. But eventually somebody gave me a credit card and that kind of started out my credit history. So right now I have about 8 or 9 years of credit history on my credit report, which is good. So that's 15% of your score. So this is just a chart. What I wanted to show you, if you went to apply for a $100,000 home, where your credit score would be, the interest amount that will be paid, and the total interest over time for your monthly payment. So that is where As you can see, starting from the bottom up, the worse your credit score is, the worse your interest rate will be, which will increase your monthly payment, which also will increase the amount of interest paid over time. So whereas if you had a, let's see, a 760, your $100,000 home, you would only end up paying an additional $68,000. This is for a 30-year mortgage. I just want to make sure I said that as well. Whereas if you had a 620, you are now paying double that, basically. So about what, $200,000 together, whereas you would have paid $168,000. So we are going to take a break for questions and answers. Questions can be sent to my email. I'll answer them either at the end or privately, depending on what you communicate in your email. And we'll just take about 2 minutes for those questions to come in. Okay, so, oh, excuse me. All right, so we're going to go ahead and get back to the presentation. So now I would like to talk about the type of information reflected that make up your credit score. I get that a lot. Some people are surprised by the things that are reflected on their credit report. So I want to make sure that I give you a comprehensive list of all the items that could affect your credit score. So as you can see, I have medical bills, household utilities, payday advance loans, and personal insurances. So we don't get a yay or a cookie or a ding in a positive way for these things in our credit report. These things can only negatively affect our credit report. So there are no trophies, no rewards for paying your Duke Energy or your DP&L or your AEP on time. But let you not pay those things, oh, they're hitting your credit report. Student loans, definitely. Auto loans, mortgage loans, bank and credit union issue credit cards, store issue credit cards, line of credit loans, judgments. These are like civil judgments, tax liens, and bankruptcy. So these things also can affect your life. So say you have a bad credit score and your employer runs your credit report, because a lot of companies are doing that now. They can say this person does not pay their bills on time. How can we trust that they come to work on time? Or how can we trust that they will do the work? So it determines responsibilities. So I know a lot of home and car insurances will run your credit report and say either we can grant you this insurance or we can't. Like I said, employers as well as bank accounts. You can't go into a bank and open up a bank account, which is like a big thing. People need bank accounts. People need their money held in a place. They need direct deposit. So all of those things can affect your life, your livelihood. So we always want to make sure that our credit score is in the best reflection of who we are. All right, next we're going to briefly talk about the credit bureaus. I didn't want to bog you down with kind of unimportant or unrelated information. I kind of just wanted to give you the basis of what they are, what they do, and how they kind of come up with these formulas to determine your credit score. So if you don't know by now, there are 3 credit bureaus: Experian, Equifax, and TransUnion. So lenders are not required to report. They do so voluntarily. They trying to take you out the game. No, I'm just playing. They I don't know why lenders, do it. I guess they want everybody to know whether you are credible or not. So they actually pay to access your credit report. So that is how credit bureaus make money. There are multiple scoring formulas. So all of this information is proprietary information. So they will never release their formulas to do the calculations, but they have calculations based on specific industries such as auto, mortgage, and credit card. Each credit bureau maintains a separate database of your information. So that's why your score will be different, across all 3 credit bureaus. Um, there's no requirement for them to be the same. They should not be the same. No one knows truly, because it's all secret information, like I said, what those formulas are. But that's why your score is different. Your reports look different. You may see an account on your TransUnion that's not on your Experian. Don't go in and call them and say this isn't reflected. You just want whatever is there to be reflected accurately and in the most positive light. So although the formulas may be different and they may keep separate databases, all the credit score components are the same. They're still using those same 5 components that we discussed earlier, and they're the same. They're still weighted the same as well. So while I troll the intranet for updates about credit, personal finance things, I came across these 2 things that will lighten up some people's day, because right now there is a new addition to the credit scoring models. It's called FICO Score 9. These 3 major changes will greatly impact people's credit scores, because when I review people's credit reports, these are the top 3 things that people have negatively reflected on their credit reports. People have a lot of medical bills. They have a lot of people who have third-party collections, in the sense that you owed somebody else and they sold your credit to someone else. Negative rental history. So those things will now be removed from your credit report and not weighted as heavy. So medical collections and third-party collections may come up, but they won't have the weight that they've had in the past. And then your rental history, this will be a positive add, because as you know, you can pay your rent on time and have, ding 1 or 2 months. Your landlord can report that on your credit report if you never pay, and you have no way of getting that off. And they may even sue you and create a judgment over it. But now it can be included or considered a factor in your payment history if you make your rent on time. Of course, these things are not being widely used yet. They literally just came out late last year, September 2016, and they are not in effect. Also, starting July 1st of this year, credit bureaus will be removing tax liens and civil judgment data from people's credit report. Can you imagine what your score would jump to if you had any of these items on there? I mean, you could probably be at a 700 overnight. I don't know how that is going to affect people's credit scores, as far as from making it jump from, I can't definitively say like 100 basis points or from 50 basis points, but I know that when when all these things are collectively enforced and being used, that is going to greatly aid people's credit scores. So right now, This is the credit scoring that is being used for across the different credit bureaus. So as you can see, this is why your score is different, because just let's look at auto lending, where Experian is using score 8 and 2, Equifax is using 8 and 5, and then TransUnion is using 8 and 4. There is no background about how they came up with these formulas. I don't know the man or the woman that sat down and made these formulas. I don't know what these formulas are. Like I said, they're all proprietary information, but that's why you can see your score being different. Even look at credit card decisioning. Experian is using 8, 3, and 2. Equifax is using 8 and 5. TransUnion is using 8 and 4. So in the newly released version at the bottom there, you can see that everyone will use 9 or should use 9. So I don't know if that means that your score will look the same all across the board. I would be interested to see when this would be used and what this would cause people's credit scores to look like. So of course, I gave you all this information about, what are the things that make up your credit report and your score, what's reflected on there. I want to definitely tell you how to access your credit report. So these are the sites that I feel that are the most trustworthy. These are the things that I feel like most of these are free, because I do the free. As you know, I budget like a boss. And they're reputable. So annual credit report is the place where you can go and get all 3 credit reports. This is not scores, just your reports for free every year. Experian, Equifax, TransUnion, of course, you can go there on a free trial basis to get your free credit score. Free credit report does the same thing as your credit report, not score. You probably have to buy your score from the credit bureau for probably like $14. And then Credit Karma, I use that on my phone just so I can keep a running month-to-month track of what my credit score is doing, how it's changing. Credit Karma, there has been some slack as far as it's not as accurate, or I've looked somewhere else and my score is this. My thing with these apps that tell your credit report, or you may even have a credit card that tells your credit score. My thing with these are that it's a tool. You want to know about around where your credit score is. To know your exact credit score number is not super beneficial to you. You just want to know that when you go somewhere to get credit, that you can get it. Usually those numbers are in the 700s and up. You should not be denied for anything that if you have a 700 or above. And your credit, your interest rate shouldn't be that high either. So you just want to use these tools to know where you are, and you not to be definitively, this is my credit score. I hope that helps. Credit Karma is free. And you can check it every day if you want to be anal about it, or you can do it on the month, but you can do 3 months. But it will always reflect your credit score for TransUnion and I believe Experian for free. If it's not Experian, it's definitely Equifax, but I definitely know it's TransUnion. So yeah. I'm going to take a quick pause here so that I can get any questions in that you may have. So we'll be back in like 2 minutes. And we're back. Alrighty. So this is the juicy part. I'm sure this is why you are all here, tonight. Try to get the tips and tricks to rebuild that credit. But I wouldn't be doing my job if I didn't show you where your credit score came from and giving you all that background information, because now you know what's ahead of you. Now you can tackle it. So disputes, if you ever see anything on your credit report that is not right, that is incomplete, that should not be there, you need to dispute. Okay, get it off of there. This is the old-fashioned way of how you do it. Most credit reports, when you look at them online, they have a dispute link where you can fill out all this information and send it to the credit bureau for them to investigate. So old school way is you get all the copies of your original documents. You include your complete and full name and address. Each item that you would like to be disputed, you explain thoroughly why this item should be disputed. And then what is your direct request? Either you want it removed or you want it corrected. You tell them exactly what you want. So this is this is the dispute process. So the credit reporting company has 30 days to investigate. If it takes them longer to investigate, or if they don't get back in 30 days, that item automatically drops off your credit report. These are forwarded for investigation. They respond back. They either tell you why it needs to stay or that it has been removed. Either way, they will communicate with you. Please know that disputing information on your credit report is very time consuming and patience is key. They're not doing this for your benefit. They could really care less if your credit report is reflected accurately. So be mindful of that. It's not going to be an overnight thing. It's not going to be an overnight process. It's not something that has even a quick turnaround. You know, it can take you a month or two to destroy your credit score, but it takes a while to build it back up to a stellar score. So remember that it's patience for power, as I say. So in Ohio, if I have viewers from other states, this is a simple Google search, your statute of limitations in your state. I did Ohio because I am based in Ohio and most of my supporters are in Ohio. So when negative information is reported, it can be reported for up to 7 years. That's anything negative, payment history, liens, judgments, student loans, any information that is negative on your credit report can be reported up to 7 years. Bankruptcies can be reported up to 10 years. So step number one in obtaining a stellar credit score is to pay down your debt, because right there you are tackling two of the the credit report components. You are decreasing the amount owed, and in a sense, you are reducing your credit utilization. To pay down debt, I always tell my clients to use the debt snowball method. That method is simply the following. You arrange all your debts owed from highest to lowest. Do not worry about interest rates. Do not worry about length of the time that you had the account. Simply list all your debts owed from highest to lowest. You attack your smallest debt first while paying the minimum on all the other debts owed. Once you attack and knock out your smallest debt, you apply that to the next smallest. So whatever you were paying for that one, plus tackling this one, plus paying the minimum on everything else. You knock those out until you pay off your biggest debt last. We do that because as humans, it is human nature to seek or want instant gratification. If you start with your highest debt, you may feel defeated. You may feel that you are never going to pay this debt off while you have these other smallest debts. Whereas if you start on the reverse, you can say, oh, I knocked this out, or I knocked this out. It's very more advantageous from a psyche standpoint to pay off smaller debts because those are things that we can tackle instantly, whereas a larger debt would take a little time and we could get discouraged in the process. And we don't want that. Also, select an accountability partner. If that's a best friend, whether that's a mentor, somebody that you look up to who you know who has good credit, use them as a resource, as a hand holder, someone that you can talk to so they can kind of keep you motivated while you're paying off debt. It's never an easy task. It is, challenging. Um, it doesn't it takes a long time. So you need someone that you can kind of go through the trenches with. In the process, find extra money, cut expenses. People have cable, then they have Netflix, Hulu, they got Apple Music. Just cut all that stuff off for the time being until you get to your goal of paying down your debt. And then get the stuff back. Like those are things that we can get back. Like Netflix is not gonna say, you can't come back and watch our videos because you canceled on us to pay off your debt. They don't care. They want you, they will take you back. So cut expenses, cut things that are extra, minimize your costs so that you can maximize the amount of money that you are spending to pay off your debt. And I talk about this in my book, Shameless Plug, of how to cut your expenses, how to reduce your expenses, so that you get to your financial goals a little quicker. Obtain a secure credit card. So, what is different between a unsecured credit card and a secure credit card is literally your unsecured credit card is not secured by anything. You have no collateral on that card. So if you have a $10,000 credit card limit, you don't have to have any assets that equal $10,000. So with a secured credit card, however, on the other end, the credit limit is smaller and you are securing your asset or your collateral on that debt is your cash payment. So what that does is they usually run your credit report, see what they will approve you have. 200 it's usually 200 to $1,000, and then you pay a cash deposit of that amount. So that now becomes your credit limit. So if you don't make that credit card payment, what that does is it takes the money from your cash deposit. That's not an option, and it will negatively affect your payment history. But that is what happens. That's what it means by secured. The creditor or the lender will get their money regardless. The secure credit card that I recommend, I love it to recommend to people. I think it works well for people who are starting out to rebuild their credit, is the Capital One Secure Credit Card. It doesn't have any fees associated with it. It doesn't have any minimum balance. It doesn't have any annual fees. It is a really good card to have to start building your credit again. So that is the Capital One Secured Credit Card. They have an online process. They tell you where to send in your money as far as your check to secure your credit card, and boom, they issue you a card. I like it. I think it's a great card. So another way to rebuild your credit is simply to automate your payments. I know a lot of people don't like to do this because they feel that the bank or the creditor would screw up their bank account. What you do is you open up a second bank account, open up a separate checking account where you can deposit all your bill money into each month and use that account as the account that you use to make your payments. So that way, if it messes up, it's not messing up your main checking account where I'm sure you do most of your shopping from. Um, the reason why you want to automate your payments is because it will be less likely that you will miss a payment day. A lot of people have negative credit because they simply just forget to make the payment. They have the money, it's right there for them to use, but they simply forget due dates. That's not their thing. So if you automate your payments, you don't have to worry about that. Also, you can ask to be an authorized buyer on someone's credit card that has good or excellent credit. What that does is, say they have a card, and I'll just use a Macy's credit card. Say they've never been late on their Macy's credit card. Say that it's in stellar condition, the balance is zero. Um, it's just a bomb. They got bomb credit. They put you as an authorized buyer on their credit card. Now their positive payment history or positive credit history with that card is now reflected on your credit report. Um, so people usually do this is what I'm going to do with my children when I have them when they turn 16. I struggled to get a credit card when I was 21 because of the things that I said. I didn't have any credit history. Um, I didn't have any credit. So they was like, I'm not going to give you a credit card. Whereas if I was 16 and I went to go apply for a credit card at 21, I would have 5 years of credit history for my mom, and it would have been good credit history. So I could have got anything that I wanted. So um, I'm going to do that with my kids when they're 16. A card will come in the mail for them. I'm going to cut that card up. They will not know that they are on any of my credit cards. And when it comes time for them to apply for their first car or their first home or their first credit card, they'll have 5 years of credit history as opposed to having no credit history. And it'll be good credit because I don't play about my credit. So ask to be an authorized buyer. They probably will get a card in the mail for you because now you can spend money on their credit card, but they probably won't give it to you. Um, just because they don't want you to have a weak moment and use their credit card and like, what? You didn't went to Macy's and bought out? Because they are still accountable for that. Um, but it's a great way as a jump start to rebuilding your credit. So ask someone to be trustworthy. This is something that is a personal thing for somebody. So you wouldn't want to ruin their credit and ruin that relationship with somebody, or get beat up because I'll fight you. And always pay your credit card payments in full each month. So never put more on a credit card than that. Never put more on a credit card than you can spend in that month. So that is a rule of thumb. I even use that now. I'm never going to put anything on my credit card that I can't pay off in that month. A lot of people always say, well, isn't it good to have just a little bit of a balance on your credit card? And I say, for what? One, you're being charged interest. I see no reason to give any creditors or lenders any extra money. If I'm going to give any extra money, I'm going to make sure that I have a tangible product in my grips. I'm not just going to pay somebody interest to carry a balance, because I could have had another pair of shoes or I could have had another handbag. So I always pay my credit cards off in full each month, because if I spend $300 in Macy's, you are only getting $300. I'm not giving you 310. I'm not giving you 35, because $5 and $10 here is $5 and $10 somewhere else. That's just how you have to think about it. So this is our little mini recap. I've showed you the credit score scale and the credit score scale and the credit score components. So those are the 5 components that we went through. I showed you the type of information that will be reflected on your credit report. I showed you information about the 3 credit bureaus, also how to access your credit report, and I gave you the top rebuilding your credit techniques. So we are done. I'm going to take any final questions, and most of these are private questions. So will be responding to said individuals. Um, if I went through anything too fast or you want more information around it, please feel free to send me an email. This is how you can contact me, period. Please connect with me on Facebook. I drop a lot of information on my Facebook, from posts to articles. I'm a blogger for an online publication down here in Cincinnati. I am always posting helpful tips and techniques for entrepreneurs, for women, for just regular everyday people. Check out my website. That is where my book is located if you want to learn how to budget like a boss, because a lot of the processes that we put in place start with a budget, and if you don't know how to properly prepare a budget, that book is going to be golden for you. It's $7.99. It's available at Amazon, Nook. Oh, I'm sorry, it's available at Amazon Kindle, as well as Barnes and Noble. What they got? They got the Nook. Sorry. And then it's also available on iTunes for our you Apple and iPad users. So it's an ebook. It's about 27 pages. It includes a template of how to construct the budget, and it gives you step-by-step instructional guidance on how to, develop your own budget and apply it to your lifestyle. Please connect with me on Instagram. I love taking pictures. You'll see pictures of things that I'm doing throughout the day, just like everyday things that I do to save money. I'll post my articles there. You'll see some pictures of some dogs because I'm also a dog boarder. So please just connect with me on social media to maximize the things that I iterate here as well as on a day-to-day life. Again, that's my email. If you have any questions, they don't even have to be about credit. They don't have to be about this presentation. Anything that you just want to know, I'm pretty sure I have content. I can definitely answer any questions that you have. So that is all for me. Again, thank you, thank you, thank you, thank you so much for joining me on this webinar. It was my first webinar, and I hope I did good. I hope I didn't sound too boring. And I hope that you really learned something and have some takeaways to better your life, because that's all it's about. I just want everybody to be financially great. So, again, contact me if you have any questions. If not, thank you for joining and have an awesome night.